All right, welcome everybody to the First Friday Entrepreneurship Call with K-State Research and Extension. This project is sponsored by K-State 105. The purpose of the First Friday e-call is to make people aware of the resources available for small businesses, the experts, the education, and the economic resources available. And we often talk not only about small businesses, but the communities that love them, because we can't have good business without good communities. As always, the call is being recorded, and you will get a link to the website when it's posted and a copy of the presentation deck. Mickey's already shared that with me. And I would very much like to know if this call matters to you. At the end of the call are 3 short survey questions. And so I'm telling you this because I want you to be thinking about this as you're thinking about what Mickey's telling you. Did you learn something today that you can use immediately? How many people will you forward this information to? And what did you learn today that was most helpful to you that will help Mickey with his knowing about what was helpful? And so without further ado, I'm going to introduce Mickey Parker, who is the owner of Accelefund, and he's going to talk about using retirement funds to start or buy a business. Mickey, thanks so much for joining us.
Oh, thanks, Nancy. I appreciate you having me on. Let me see if I can get this shared and we can get going here. Okay, is that showing up? Nope. Yeah.
Yes.
Are you
Yes.
seeing the screen? Okay.
I'm seeing the right screen. Yep.
Awesome. Again, thank you. I appreciate it. Happy New Year to everyone, and really glad to be invited to do this presentation. You know, I guess the real goal today is to kind of let you know about a business financing option that's been around for decades, but yet most people have never heard of it. So just again, appreciate the opportunity to get this out there. Let's see, are we moving forward? Mickey Parker, I actually grew up in Manhattan, went to Manhattan High, on to K-State in accounting and finance. Been a controller and CFO, all in privately held businesses. Currently licensed as a CPA in Kansas. I do not do normal CPA type work. What I do here with retirement plans and funding of businesses is strictly what we do. And since 2011, been helping entrepreneurs use their retirement funds as startup capital for a business. You know, I refer back to in February of 24. Amber had a presentation, and you know, there were a couple of important points there, and I think the idea of how important it is to start new businesses, and the comment there that I highlighted: virtually all new net jobs come from small and young businesses, and that's who we help, and that's what this type of financing and funding can do is create jobs in our communities across Kansas. The most common reason for people not starting a business, but pretty well known, is lack of funding, lack of financial resources. I also throw in there the lack of education on those sources. This being one, I suspect, and I don't know without a show of hands, but a year or so ago, I was in a sponsored a meeting with a room full of bankers. I think there were probably 90 people there, and there wasn't a handful of them that had heard of this, even though, like I said, it's been around for decades. So there's lots of people that don't know about the small business development centers, you know, great resource in Kansas, Network Kansas, all those types of business startup resources that really I appreciate you guys even getting that type of information out to help educate those people who might be wanting to start a business as to what those resources are. So we know that the common and traditional sources of capital are, the friends and family. People can go get home equity loans, bank financing, credit cards, partners. But personal savings and investments, which is referred to as bootstrapping, is the number one source of financing. And some of that generally comes from an IRA or 401k. But most people think of using an IRA or 401k as number one, they have to take a distribution. Maybe there's a loan option available on their plan. So what we're going to talk about is what's called a ROBS. ROBS stands for rollover for business startup. I kind of refer to it as bootstrapping with a K. Quickly go over this. If you take a distribution from a retirement account, you generally know that is a taxable event. You're going to have to pay tax on that distribution. Federal income tax, state income tax. If you're under 59 and a half, there's going to be a 10% early withdrawal penalty. The example that I show here is somebody who needs $150,000 to start a business. They say, okay, I'm going to go pull it from my IRA. Well, at a 24%, 6% state, 10% penalty, they're gonna spend as much as 40% in taxes. So that 150,000 that they pull out, they're going to end up paying 60,000 in taxes and penalties and only be left with 90,000. You ultimately have to pull out 250,000 in order to net to the $150,000 that you need to start a business. And that can be avoided with the ROBS, and we'll talk obviously more about that here in a little bit. Taking a loan from the 401k can be an option, particularly for those who are not leaving their job and want to start a side hustle. Limits generally are 50,000 or 50%, has to be repaid in 5 years, quarterly or substantial equal payments. The downside to loans is you have to pay them back, generally with interest. So that's going to take cash flow. And again, I'm really talking about smaller businesses here. Someone who's using a $50,000 loan is going to end up having to use $11,500 of their revenue just to pay back the loan. And again, that can be avoided with a ROBS plan. So what is a ROBS? It's an acronym for rollover for a business startup. It's a method to invest funds that are in a retirement account on a pre-tax basis into your own business. The stock of the business becomes an investment option in the retirement plan. So think about your current IRA, 401k. You're currently investing in other stocks, other mutual funds. What if your own business, if you wanted to start a business, what if that was an investment option and you could funnel your money into your own business? That's essentially what a ROBS is. Why would it be a good fit? Again, debt-free. We talked a little bit about that, not having to pay interest. No penalties and early withdrawal penalties or paying taxes. You're making an equity investment in your own business. There's no repayment required. There's not a note to sign. There's not interest to pay. It actually can be used as an equity injection for an SBA loan. Now, the SBA actually formally recognized ROBS as a source of equity in obtaining an SBA loan. So we have clients who will come to us, they're getting ready to buy $1 million business. They need to put 10 or 15% down, and they can use their retirement account to do that. And they can use their retirement account, again, without paying taxes and penalties. It is different from a self-directed IRA. I talk to a lot of people who say, okay, yeah, I've heard of being able to use your 401k. Most people obviously think of it, I'm going to have to take a withdrawal and pay the taxes. But others will say, yeah, I've heard about self-directed IRAs. And a ROBS is different from a self-directed IRA. What we see is that self-directed IRAs are generally used by somebody like an angel investor, because the angel investor is not going to be managing the business, isn't going to be receiving a salary, and generally is only investing to own maybe 10 or 15, 20, 25%. With a ROBS plan, you have to do, you're going to do all those things. You're going to manage your own business. You're going to pay yourself a salary. And typically the ROBS plan can own 100% of the business. So I just bring that up as a kind of a comparison to a self-directed IRA. So what's the process to do this? Forming a closely held corporation with the state, that generally is well, not generally, it has to be a C Corp. That C Corp then adopts its own retirement plan. Once that plan's adopted, you roll your money over into that new plan. Once the money's in that new plan, your account is going to invest in the stock of that new C Corp. The funds get moved from your retirement account into the corporation in exchange for a stock certificate. So kind of a 5-step process. I look at it as if we wanted to start a company called First Friday Inc., form that corporation. First Friday Inc. is then going to adopt a retirement plan, just like maybe a 401k plan or 403, 457, whatever you may have. They're going to adopt a 401k profit sharing plan. So you have an unfunded company now with really an unfunded retirement plan, but now you can roll over your retirement funds to that plan we just created. So it's now sitting in your account in the new retirement plan. But rather than investing in mutual funds or stock of Microsoft or Amazon or Nvidia or the latest publicly held stock, you're going to invest that and put the money into your own business. Like I said, in exchange for a stock certificate. So at the end of the day, the money is in a corporate bank account, and your retirement plan is the stockholder and owns shares of stock in that company. And it generally takes about 2 to 3 weeks to get that process done. The biggest potential I guess hang up is whether your custodian is prepared and how quickly they respond to your request to roll over. So we've had, if you deal with the majors or our clients that are dealing with majors, the Fidelities, Vanguards, Schwabs, Edward Jones, you know, they're quick on that. Where we run into problems if somebody has a small company and a obscure plan, and sometimes that can create some of the smaller ones don't want to let go of the money, so they do everything they can to slow the process down. But generally we can get that that person funded in about 2 to 3 weeks. Why do you have to use a C Corp? Because the IRS says so. It's an IRS requirement, not a Mickey requirement. Qualifying employer securities is what the stock of the employer who's sponsoring the plan, and that's how the IRS defines it, is stock of that employer who's sponsoring the retirement plan. So in the example, Friday Inc. is going to be the sponsor, and you are buying stock in First Friday Inc., and that's called a qualifying employer security. The biggest issue that people talk to me about with a C Corp is the double taxation. We generally don't have that issue because it's generally when dividends are paid, and won't go too deep into the accounting, but generally you pay taxes on your profits, and then you take those profits and distribute them as dividends. Then they're taxed again as dividends to the shareholder. So it's called double taxation because that revenue's being or profits being taxed twice. We generally don't have any of our clients that are going to pay dividends. If they have extra cash in their plan, what they would consider doing that, we generally talk to them about buying that stock back from their retirement plan, putting the money back into the plan, and kind of redeeming that stock. So how do you go about setting up a ROBS? You use a ROBS provider. My company, Accelefund, is a ROBS provider. There is a fee involved. Generally, it's about $5,000. There's not a lot of ROBS providers around the country. There's a couple of big ones, one on the East Coast, one on the West Coast, and some other smaller ones like us. Generally charge $4,500 to $5,000 to do that process. And because of that, there's a minimum of $50,000 because it's just not economically feasible to charge somebody $4,500 to roll over 15,000. It just doesn't make sense. So 50,000 is generally the minimum that we will use if somebody comes to us and says, "Hey, we want to use our retirement plan to fund our business." Most ROBS providers are also the third-party administrator of the retirement plan. So from a cost standpoint, there's an additional, usually a monthly cost ranging from like 99 to 150, depending on the type of plan. But the IRS does have some tax credits that are available, 3-year tax credits. Actually, the Secure, I believe 2.0 added some tax credits in addition to what had previously been there. So there are some tax credits that may be available when starting a plan to help offset some of that upfront fee. The biggest question I always get is this legal? It doesn't sound right. People just say, it doesn't sound like, taking money out, not paying taxes on it. But there are specific exemptions in the IRS code and ERISA that allow for the employer's stock to be an investment option in the retirement plan. The IRS actually looked at this in 2008 and wrote a memo about it. So we use that memo as kind of the guidance. That's kind of the framework to try to make sure that our clients stay compliant with the things that are required. And we'll talk a little bit about that here in just a minute. Not intended for you to read all of this, but if I have a client who says, "Will you talk to my CPA? Will you talk to my my attorney?" They've never heard of this. Again, it's not surprising that I have CPAs and attorneys who haven't heard of it. And this is the kind of thing that I will provide to them. There are the specific exemptions in the Internal Revenue Code, which allows for this, and even the ERISA has certain language that specifically allows for the company stock to be purchased by people using their retirement account. So it's definitely legal. Like I said, the IRS looked at the topic back in 2008 and addressed some of the some of the problems they were seeing. And again, we'll talk a little bit about that and what some of those requirements are. So what can you use to fund your business? If you have a 401k, the 403b nonprofit, 457 governmental, IRAs, profit sharing plans, SEP, simple government thrift plans can all be used to fund the business. And you do not have to use all the money that's in an existing account. It's not unusual for us to have somebody who may have $200,000 in their 401k, they only want to use 100,000 of it for the business, and that's fine. Now, we will have some who will roll the entire 200 over, put 100 in the business, and then put 100 in more traditional retirement, investment options within mutual funds and so forth. So either way is an option for them. Now, what cannot be used is a Roth IRA or an IRA inherited from a non-spouse. So if a rich uncle leaves you an IRA, that cannot be used for Robs, but an IRA from a spouse, and we've had a number of those where a spouse has decided to start a business using an IRA inherited from their wife or husband. I'll often get the question that says, can I use my 401k from my current employer? They're wanting to go start a side hustle, want to pull some of that money out. Most plans require that you separate from employment to get access to your funds. So there are exceptions. So I would always encourage you to check with the HR department or your custodian. And the specific question is, can I take a portion of my account, transfer it to another qualified plan while I'm still working? This is all governed by your current employer's plan document. It's not something you have control over, not something we have control over. Whatever your current retirement plans allows in the way of distributions, of in-service distributions, that's controlled by that. But I would say probably 95 or 98% of plans out there do not allow you to get a hold of your money and move it to another plan while you're still employed. So vast majority of our clients are people who have been in the corporate world for a while, have developed their 401k, they're going to quit their job and go start this new business. Alternatively, they left a job 3 years ago, they transferred it to an IRA, and it's sitting in an IRA. At that point, they have access to it at any point in time. Those are considered rollover funds, and they've already left their job, they've separated employment, so they have access to those funds. So what types of business can you start or buy? Generally, any type of business that provides goods or services. So the exception to that is things like direct lending. You can't be a bank, receivables financing, and generally anything that's passive. We don't want you setting up a C Corp, having that C Corp invest in real estate that's truly passive. Now, as long as you're going to be actively managing the real estate is an option. But if it's truly a passive investment, then that's not a good thing. Things like don't use your C Corp or your ROBs to invest in gold or silver or things like that. There's better options, quite honestly, than using a ROBs plan to do those kinds of things. Now here's some examples just to give you an idea. Now we do business nationwide, so helping people from coast to coast. Some of the more recent ones, helping a husband and wife purchase an existing franchise down in Hutchinson. Husband and wife starting a sandwich coffee shop down in rural South Central Kansas. Both of those were actually referred to us by the SBDC. They had contacted them with help, and they referred, hey, talk to Mickey about an option to help finance it. But others that I will bring to your attention. I think what's important here is you can have multiple people, a husband and a wife. In both of these cases, both the husband and the wife used IRA funds that they had. So it's not necessarily just one person. Now, the vast majority of our clients are probably singly funded, but one of the ones there, a little more halfway down, a brother and a sister went together. I'm currently working with two sisters here in the Kansas City area that are working together. So it certainly there can be partners involved in that. The other, I guess, one or two that I'll bring to your attention toward the bottom, in Kansas, a person rolled over $317,000. They used 125,000 of that as an equity injection for the SBA loan to purchase a roofing or exterior business. The bottom one is a very similar. They used the money as an equity injection to go buy an existing business. In that particular case, that business was so successful that he generated enough cash from that business to redeem that stock, and he was able to put his 188,000, actually maybe I think it was a little bit more, back into the retirement plan, so that now he personally owns that business. The retirement plan no longer owns the business, but he's still using the retirement plan, the 401k portion of it, for his employees. What are some of the requirements to use a ROBS? The person that is rolling the money over must be a bona fide employee of that C Corp, and they should receive W-2 compensation from the business. This is one of those that the IRS looked at back in 2008. They were having people roll over their money, start taking the money out, but they were taking the money from the rollover funds. So the second bullet point there says the compensation must come from the revenues, not the transferred funds. So if you start the business, you roll over money, you need to be prepared to live, have living expenses paid some other way. You can't just start paying yourself out of the business unless it has started generating some revenues. The big, and probably the thing I spend the most amount of time on with clients is prohibited transactions. And so what's considered a prohibited transaction? Those are transactions that are primarily self-dealing, which means you can't do business with yourself or a related entity. I had a potential client call and say, I want to buy a fourplex. I'm going to be actively managing it, which meets the non-passive rules. But then he said, I want to live in one of the 4 apartments. That is a prohibited transaction. You personally cannot do business with that C corporation, nor can your relatives. So that's one example of things you can't do with the ROBS. Doing business with another entity you own. I had another potential client, very successful manufacturing business. One of his largest expenses in his business was trucking. So he said, I want to go start a trucking business with my retirement account. But the problem was the biggest customer and almost probably the only customer of his trucking company was going to be his own manufacturing company. That would be considered a prohibited transaction because his C Corp that is owned by his retirement plan would be doing business with an entity that he personally owns, and that would be considered a prohibited transaction. So certainly always talk to a ROBS provider, tell them what you're trying to do, what any kind of related party interests that may be involved there to make sure that we don't create a prohibited transaction with what you're wanting to do. What we would generally recommend in that case is, if it can work, is to try to put the trucking business inside the manufacturing business. Well, then can he use his retirement plan ROBS to fund the manufacturing business? That's possible, and that's kind of what we talk about here. You can use a ROBS to capitalize an existing business, but remember, we've got to be a C Corp. So if it's not an existing C Corp, then if they're operating as an LLC, then that's not an option. What we have had some clients do is they're starting, maybe just starting out, and they started out as an LLC. With the advice and working with their attorney and their CPA, they actually formed the C Corp and then contributed their LLC to the C Corp, so that ultimately the C Corp owned the LLC, Now we can fund the C Corp. The C Corp can fund the LLC, and that's not considered a prohibited transaction. But when we are trying to capitalize an existing business, the IRS says that for the retirement plan to buy stock in that business, it has to be done at fair market value. So it would require an appraisal from a qualified independent appraiser. And if anyone is familiar, Will Katz in Lawrence has actually helped a lot of our clients nationwide with appraisals. He's I think now doing that pretty much full time. He was the head of the SBDC there at KU, and now doing his valuation business, and does a lot of valuations for SBA and banks. Who they require the SBA requires appraisals for buying existing businesses. So I always say talk to your CPA or advisor if there's an opportunity to try to create use an LLC along with the C Corp for the funding. When you set up a retirement plan, you're going to have all what you would normally have if you were a business person setting up any kind of a retirement plan. It's pretty basic. There's really nothing special about it. You can do a profit sharing plan. You can do a 401k plan. What we generally see is most of our new clients start with a profit sharing plan. That's because it's not obligating them to match any salary deferrals that a potential employee may want to have. But this is also an important point as a benefit of using a ROBS to fund your business is if you have some success in this business and you're generating some profits, you can put 25% of your compensation as a contribution from the company back to your retirement plan. So I think this is a really underutilized portion of a ROBS plan, and we try to talk to clients to make sure that hey, as you become successful, we've got clients that are paying themselves $200,000 a year, and then turn around and putting 25% of that or 50,000 into their profit sharing plan, and that's a personal tax deferred plan for them individually, and it's also a tax deduction for the corporation. So certainly, and then for 401k, what generally happens is that they may go 2 or 3 years or longer and say, hey, now I finally have some employees. I think it's very important. They're asking me about it. They want to have a 401k. We can switch them to a 401k, salary deferral plan where they can match a portion of that. So what do you need to maintain that plan? Generally, the ROBS provider, in our case, we provide all those support services, the things such as the compliance testing. There's an annual 5500 report that has to be filed with the IRS Department of Labor. All of those types of things are provided by the support service company, generally your ROBS provider, for a monthly fee. Again, depending on the type of plan you have, is how that cost is determined. So then we talk about let's say you've had some success or you're to the point of wanting to exit. Generally, what we see is I'll have a client call me and say, Mickey, I want to keep running the business, but I want to own it personally. I don't want my retirement plan to own it anymore. So there's a couple of options. They can use company funds or personal funds to buy that stock back from the retirement plan. The money's going to go back into their retirement account, and the stock, which was being held by the retirement plan, is now going to go to them personally. So those funds can come from, like I said, either personal funds or company funds to buy that stock back. So someone who wants to continue to operate the business, and we have a number of clients that will do that, and I mentioned earlier that any transaction has to be done at the current fair market value. We would recommend they contact Will Katz, and they're going to have to get a valuation of their existing business. What is that business worth today? It might be worth more. It might be worth less what they originally put into the business. But whatever the current fair market value is, that's what they will have to use to buy the business back. Maybe we have a client that's selling the company. Usually those are asset sales. The proceeds go into the company. Once the company's is all cash, the company's going to use that cash to buy the stock back from the retirement plan, and the cash is going to go into that participant's account, and they can ultimately transfer it out to an IRA. Of course, we do have a few that contact me and say, Mickey, I'm going out of business. Through COVID, some of the restaurant businesses, obviously the ones that were really tough on that. So, had a few of those, um, but those that is a method to terminate or exit a ROBS plan. Don't want to get too deep in the weeds, but I do want to give you an example of some kind of maybe creative ways to exit a ROBS plan. I have a client who used $102,000 to start a metal glass fabrication business back in 07. That business is currently valued at about $2.6 million. His exit strategy is he wants to continue to run the business, but he's trying to redeem the stock. He wants to get the money back into the retirement plan. What he can do in this case, rather than buying it and putting the money back, he can take what's called an in-kind distribution. In-kind distributions, though, are taxable. So if he took an in-kind distribution, he would owe tax on that current value, on that $2.6 million. But the IRS has a strategy called net unrealized appreciation. In his case, he can take that in-kind distribution, own the stock personally, but only pay tax on that original $102,000 that he originally put in back in 07. And the unrealized appreciation isn't taxed until he sells the stock at a later date. And if he holds it for more than a year, he can get capital gains treatment. So again, we're not tax advisors. This is something that's actually coming from their tax advisor, but I bring it up because there is a way to, I've had, now 2 clients use this net unrealized appreciation for some pretty significant capital appreciation in that business. So summary, ROBS is a financing solution, allows business owners to invest their retirement funds in their own business. The biggest thing is without paying taxes or penalties or necessarily taking out a loan unless they're using it to supplement their SBA. Certainly, there are some specific guidelines that must be followed. Certainly encourage you to work with a ROBS provider on that rollover process. As I mentioned, Accelefund, we are a ROBS provider. We have clients nationwide. We've been doing this. The business has been in business since 2004. I've owned it since 2011 when I bought it from the person who first started the business. But the last item on there, I think, really applies to this group is we provide educational seminars on using these retirement funds as startup capital, and that's virtual or in person. So if you are a chamber or if you have any type of group that might benefit from just knowing this option, because again, most people have never heard of it. If somebody mentioned it, they'd say, "Oh, that doesn't sound like it's legal," so they blow it off. But I am more than happy to provide these types of educational seminars. I can get it into a 10-minute window to just really hit just the highlights. We can do more detail. So I really throw that out there to this group. Is if you have a need or think there would be some benefit to having a seminar on this, don't hesitate to reach out. I'm more than happy to do that. And here is my contact information. I am located in Lenexa, but but again, willing to travel if the situation's right, certainly can do whatever we need to do in person if that's a better option. So I guess at this point we can open that up for questions, Nancy.
Fantastic. Yeah, just for the record, that was done in 40 minutes. So, you know, if I would believe him if he says you can do it in 10 minutes with
Well,
one
we
client.
cut out a little detail there. Just
Oh,
want
yeah, but it was
to get high level
great.
stuff.
It was great, Mickey. Thank you. What questions do you have? If you want to put them in the chat, you're welcome to, but you're also welcome to open your mic and ask them yourself.
Oh, I didn't do that good a job. Come on.
I suspect a lot of these folks are thinking about sharing it with others. And so the main
Yeah,
thing.
and don't hesitate. I have people who will say, I don't want to talk to them. I'll tell them about it and just refer them to me. And I do spend the vast majority of my time is on that educational piece because I'm talking somebody who's calling me has never heard of this. Again, they're skeptical. I do have those potential clients who say, would you talk to my CPA? Would you talk to my business attorney about this? Because they've never heard of it. So happy to do that. I spend a lot of my time just talking through the process, and it doesn't work for everybody. It's not the right thing, and that's fine. We've still educated them, let them know that option is available to them.
Oh, Mickey, while we're waiting for people to think of their questions, I think the worst possible outcome is the last one you gave, and that is that I'll go insolvent with a poor idea and lose all this money. How do you help people to vet their ideas? Who are the people that you work with to make sure that they're starting with a good idea?
Again, I will send everybody that I can to the SBDC. I mean, great people. I've worked with the groups here in Johnson County, at KU, Wichita, Pittsburgh, Fort Hays. I mean, all of them are have great advisors. So I always, if I've talked to somebody who hasn't already talked to the SBDC, that's generally where I will send them.
That's fantastic. And yeah. Okay, so what happens in the event of death? Let's say this is a question on the chat. Let's say the business is successful and the participant has not transferred ownership out of the plan. How does that close up?
Sure. Well, as with any normal retirement plan, hopefully that person has designated a beneficiary. Generally, it's a spouse. So actually, that retirement account will become the spouse's. So the spouse's account will now be the owner of the plan. And generally what we'll see, depending on how active the spouse is in the business, we get some that the spouse knows nothing about the business. So then in that case, they're probably going to work with their accountant, with their attorney, and probably try to sell the business. At that point, once they sell it, we go through the process. Those funds end up coming into the company. The company buys the stock back from the plan, and the cash ends up in the spouse's or whoever the beneficiary is, whether it could be a son or a daughter, whoever is listed as the beneficiary. So it acts just like an existing retirement plan IRA. Whoever you list as beneficiary will get that benefit.
Good question. Okay, well, we know Mickey's email address, and feel free to reach out to him with any of your questions. You've got his phone number right there. Let me just give a few announcements in case there's anybody that has an announcement, while I'll open it up for you in a moment too. We have several K-State Research and Extension opportunities this month. Remote Work Wednesday is the second Wednesday of every month, which is next week, January 8th. The the topic this month is remote work, our company's experience by Linda Jameson from Adams Brown. And that, I'll put the link in the chat for how to sign up for that. If I can multitask here. Let's see. We have February is going to be a big grant writing workshop month. We have an unusual opportunity on February 10th and 11th. I'm working a lot with specific people, and Amanda Lindahl was on the call here. We are working with K-State's food resource people, Amanda Lindahl and others, to have a grant workshop focused on producing local foods or increasing local food access. And that workshop is February 10th and 11th. All of the workshops are posted at the link that I just gave you online. A second workshop for just the general public is on February 19th and 20th. And then we have 3 scheduled in person in Wyandotte County, Topeka, and McPherson. And those are full day workshops. If you want information about those in-person workshops, send an email to me at that link that I just posted, KSRE CV. And if you have an event that you would like to promote to a statewide audience, please send it to me at that same email address, and I'll put it on the First Friday meeting notice, which goes out to approximately 1,600 Kansans each month. And if you would like to promote these First Friday calls in your own mailing lists, why, send me an email and we'll get you on the mailing list for that. And I want to apologize again. Something has messed up someplace. If your notice says that the calendar notice that you put into your calendar says 9 a.m., that's a mistake. It should be 9:30, and that came from me. So I need to figure out what the mistake is that happened. They should say 9:30 a.m. Does anybody else have any announcements they'd like to make? All right, then in closing, our next call in February is Deanna Gearing from Pittsburgh, Kansas, is going to talk about how Pittsburgh has used land banks to develop businesses and homes. And I always end with a thought for the day. Sometimes you have to let go of the picture of what you thought life would be like and learn to find joy in the story you are actually living. It's by Rachel Marie Martin. Thanks everybody for joining us. And Mickey, thanks so much for sharing your expertise.
Thank you. Appreciate it.